and thank you for watching my videos. We've learned what the Forex market is. We've learned how to invest in the Forex market. We've also learned how to study the market and to get the information that we need in order to make our investment successfully. Now what I want to do is take some time to help you develop your personality as an individual trader. And the first step to doing this is to study the different time frames. Now, here's what I mean about time frames. When we look at a 15-minute chart, it means the candlesticks on that chart represent 15 minutes of time. So when we look at that candlestick, we can see the activity or have an idea as to the type of activity that took place within that 15 minutes of time. If we look at a 60-minute chart, it means we can see the activities that take place within a 60-minute period of time. So each candlestick represents 1 hour of time. Then we have a 2-hour chart, 4-hour chart. Well, you get the idea. So we have different charts for different traders. So in this video, what I want to do is to show you the importance of comparing the differences between a short period chart and a long period of chart, depending on if you plan to be a long-term trader, a short-term trader, or a day trader. So here's some more information that we need to know about time frames. So, and it's also best to stick with one time frame as an amateur investor, because when we begin to use all of this information, it can be overwhelming. And it's usually better to take small pieces of information as we begin to invest in the market, so we don't get confused and lose focus when we are examining the market and determining our strategies. So stick with one time frame and see if it works for you. Again, we can do this at the demo account, so whatever mistakes that we make in this market, we can make them at the beginning when we are not risking real money. Okay, so let's talk about time frame breakdown. Here's what we need to know. So if you plan to be a long-term trader, meaning you are going to open a position, keep that position open for a long period of time to make that maximum profit, you probably want to look at a long period time frame, such as maybe a 1-day chart, 2-day chart, 1-week chart, 1-month chart. Well, you get the idea. Now, there are advantages and disadvantages with the long period charts. The advantages are such. So you don't have to watch the markets intraday. So meaning you're not sitting in front of the computer all day waiting for opportunities. You saw the opportunity before, just you open your position, leave it open, and once you're satisfied with your profit, then close and repeat the process. However, there are a few disadvantages exactly, such as you don't get to realize the many different opportunities that take place. Meaning, if we're looking at larger period time frames, we don't get to see as many breakouts or breaches of the lines of support and resistance that we do on the shorter period time frames. So again, there are advantages and disadvantages for trading long-term and trading short-term. So it doesn't mean being a long-term trader is better than being a short-term trader, whatever works for you. Okay, so let's talk about short-term or the swing traders. So here's what we need to know about the swing traders. The short-term traders, they use hourly time frames, meaning the 60-minute time frames, or maybe even the 2-hour charts, or maybe even the 30-minute charts, and hold trades several hours to a week. So if you are a short-term trader, it means you want to make your profits sooner. Now, the size of your profits are not going to be as big as they would be if you were a long-term trader, but if you don't have the patience to wait for those big profits, then that's why we have short-term traders. Now, advantages and disadvantages. Advantages is you have less chance of losing large amounts of capital over the months because you do use your stop loss. Now remember, to always use a stop loss. And also, less reliance on one or two trades a year to make money. So, again, if you are a long-term trader, it means you have to wait and wait and wait for the patterns to be in the right position. However, if you're looking at a shorter period time frame, then we can see more chart patterns. We can see more breachings of the lines of support and resistance. And we can use the tools, the technical indicators that are available on our trading platforms to catch those trends immediately. However, there is a disadvantage that you have to keep in mind. Transaction costs will be higher because short-term traders, they open more positions. They open and close more positions than the long-term traders. Every time you open and close the position, your position, you're actually losing a small amount of capital through spreads. Now, if we make a profit, then whatever we lose when we close our position, it gets taken from our profit. However, if you're a long-term trader, you don't worry about spreads all that often. Okay, so now let's talk about the intraday traders, meaning you open and close throughout the day. Okay, so advantage and disadvantage. Lots of trading opportunities and less chance of losing large amounts of capital over the ensuing months. So again, we use the stop loss and we see a potential area for making profit. But if we're wrong, we use the stop loss and the amount of capital we lose is such a small amount. And the next opportunity that we see, what we do is we open that position, set our target a little bit higher in order to compensate for what we lost before. So if you're trading throughout the day, then it's actually easier for you to compensate for whatever you have lost on your unsuccessful trades. Whereas if you're a long-term trader, you have the potential of losing big as well, and it's very difficult to regain what you've lost. Disadvantage of a swing trader, disadvantage of an intraday trader is this: transaction costs will be much higher, and profits are limited. So you have to think, the long-term traders will have higher profits and also less transaction costs. However, if you are a short-term trader, more opportunities for making a profit, and it's easier to manage your risk. So again, long-term trading, short-term trading. Neither one is better, but whichever you prefer and whichever fits your schedule and whichever fits your personality, that's what you go with. Okay, so more information about time frame breakdown. We have to consider the amount of capital that you have to trade. So again, if you want to make trades throughout the day, you have to keep in mind that we want to set our stop loss and keep our stop loss strictly because we do not want to lose large amounts of capital when we are opening and closing positions. And you have to worry about the spreads. So we always begin our positions at the losing end anyways because of that spread. So also, we need to know that shorter time frames allow you to make better use of the margin and have tighter stop losses. So it's just what I've shown you in the charts about the shorter of a trader that you are, more opportunities. But the longer of a trader that you are, more profits for you when you keep that position open. So it just depends on also patience too. How patient are you? If you're the type of person that needs to make their profits now, then maybe you can sacrifice the larger profits and just get the short profits now. Okay, so here's how this works on real charts. So here we're looking at the pound dollar pair, and here we're looking at a 10-minute chart. So here we have a slow moving average, and notice that the market is ranging, and notice that this 200 period SMA has been tested. However, it's been tested for the 4th time, and it looks like we have a really strong break here on top. So many people think that the market will go down. However, if you went short, you would have lost a large amount of capital. So what went wrong? Well, we didn't see the market in the different time frames. For example, we looked at the market at the 10-minute chart. So here we're looking at the 60-minute chart, and as we can see, we have a different perspective on that pair. So remember, before we looked at the 10-minute, then we looked at the 60-minute. So same pair, but 2 different perspectives. And as we can see, when at the same time that candlestick breached that SMA, that slow moving, that 200 period SMA, at the same time on the 60-minute chart, that same candlestick breached the line of support. However, that line of support held and pushed the prices upward. So remember, it helps to change your perspective. Sometimes we want to look at a shorter time frame. Sometimes we want to look at a slightly longer time frame. Okay, so, and also let's extend that time frame. So now we're looking at a 240-minute time frame, and as we can see, the longer the time frame, the stronger the trend. So we can't just look at one type of chart. We can't just look at the 10-minute chart. That's why we made that mistake. Okay, so that's why multiple time frames are important. So I know I mentioned in the beginning of the video to stick with one time frame. However, as we get to learn more about the market, then we can pick 2 or 3 more time frames to look at, because we want to get many different types of perspective when we look at the currency pairs, because that gives us an advantage when we are investing in this market. And that's how we become successful investors. We try to increase the number of advantages that we have, because it's really difficult getting involved in this market. It's not easy as advertisers make it seem. So we need to study this market, we need to study hard, and we need to take advantage of whatever advantage we can get. Okay, so here's another example of time frame mashup. So here we're looking at the euro-dollar pair, and we're looking at a 240-minute chart. So notice we have an uptrend, and this line is giving us a good line of support, even though it's been tested a few times. However, let's change the 240-minute chart into the 60-minute chart. Notice that we're looking at the same currency pair, the euro-dollar. However, the positions of the candlesticks have changed. So, and then also, we're going back to using oscillators. And notice that on the line of support, we have 3 strong bearish candles, and then we have a doji. And then we have a stochastic crossover near the oversold zone. So remember, we're using different time frames in order to find the signals that we're looking for. Okay, so, and as we can see, the trend line is holding. So Before we had a really strong bearish market. Now it's ranging on that support, and also the stochastic is showing that the market is oversold. And look what happens. The market reverses itself. We have a bullish trend, and had we acted on that signal, we would have enjoyed a large profitable investment. So again, we look at the different time frames to look for the signals that we need in order to make a successful investment. Okay, so let's talk about time frame combinations. So again, just like I explained before, it's good to use 3 time frame combinations in order to get the perspective that we need. Now, the largest time frame that we consider that our main trend. So that shows us the big picture of the pair that we want to trade, meaning we want to have one large frame, and we also want to have one short frame. When we look at the large frame, we can have a general idea as to where the market is going. But when we have a short frame, then we have a specific idea as to what direction the market will take off in within the next few time frames. Okay, so we want to keep that in mind. That's how we use the different time frames. Okay, so here are some examples of how we can use multiple time frames. If you are an intraday trader, you can use the 1 minute, 5 minute, and 30-minute charts. So using those charts, which are very short and kind of dangerous if you are an amateur investor, personally, I would not recommend anyone new to the Forex market to be an intraday trader, because it's very difficult to understand the market when you're trading with those very short time frames. And then also 5, 10, 5, 30, and 4-hour charts are also a good combination as well. So again, the 5-minute charts can help us spot a trend when it's about to happen. The 4-hour charts can give us an idea as to where the market will head in the distant future, or where the market should be when we're using our moving averages. And then we have some other combinations as we can see on the slide. Okay, so here's what we need to know about developing your personality as an individual trader. First, we need to understand what type of trader you plan to be. Do you plan to be a long-term trader? Just open a position and maybe every now and then, if you have the time, maybe drop by the broker website, open up the trading platform to see how your investment's doing. Or if you are able to sit in front of the computer all day, every day, looking for those opportunities. So we have to know, how are you going to trade in this market, and also how much time. And then pick the time frame that's right for you. And when we do pick the time frame, will it give you the information that you're looking for? And also, when we do find the right time frame that's good for us, we also need to compare the different time frames with each other. And if we see any discrepancies with the charts, try to understand why are there discrepancies. And with the knowledge that we have about the technical indicators, the tools on our trading platforms, we can use those in order to understand why we have the discrepancies. And we can bring in our knowledge about fundamental analysis and to use the information that's been released from the government and the central banks to determine why the market is so volatile within the past 20 or 30 minutes, but yet within the past 4 or 5 hours, it appeared to be very quiet. So we can practice using the different time frames, and we can practice using that knowledge in all 3 time frames and then comparing them when we open our demo accounts, and any mistakes that we make, they can be smoothed out, ironed out, and then when we're ready to trade with real money, we have a clear understanding as to what type of traders we are and how to plan our strategies accordingly. Thank you for watching my videos, and good trading.